What everybody ought to know about this stock and bond business. What are bonds? Bonds are a kind of promissory note. People who buy a company's bonds lend their money to that company, and the company agrees to pay them back at a set date, known as the maturity date. For the use of the money, the company generally agrees to pay a set rate of interest of, say, 3% per year. Bonds are usually backed by a mortgage on the company's property or by the general credit of the company. Unlike stockholders, bondholders are not part owners of the company, they are creditors of the company. Of course, as creditors, their claims must be satisfied if the company goes broke before the stockholders or owners can divide so much as a dime's worth of the company's assets, if any. Because bonds have this prior claim, they are regarded as the safest kind of security. That's why they appeal to conservative investors, widows, retired people, anyone who is willing to take a smaller return on his money, provided it's a surer one. In times of economic uncertainty, bonds are always comparatively more attractive than stocks. Their prices do not fluctuate as much as stock prices because they bear a fixed rate of interest and the element of risk is not as immediate a factor in the price. Of course, the price of any bond is apt to be depressed, especially if there is any suspicion that the company is having a hard time. In addition to corporate bonds, there are state, city, and government bonds. On state and city bonds, the revenue from taxes is frequently pledged as security for repayment. Back of U.S. government bonds, the highest grade investment there is, lies the integrity of the nation. Just that and nothing more, because nothing else is needed and nothing could add greater security. The integrity of the country is the standard of investment values. State and city bonds are attractive to many investors because the federal government does not tax the income from these bonds as it does the income from corporate or most U.S. government bonds. Bonds are usually issued in $1,000 units, sometimes $500, but as a matter of tradition, they are usually quoted as though the price were a percentage of the face value. Thus, if a corporate bond is said to sell at 981 halves, it actually sells at $985. Government bonds are quoted in 132 NDs. Thus, a quote of 100.16 means 116 30 seconds, or in actual dollars, $1,005.